Is your car an instant asset write-off? Can you claim a tax deduction for that? How does this instant asset write-off thing work? Well, this is a question that we get a lot here in the Maximum Profit office, and today I'm going to try and answer that question for you in this video. G'day, Ben here, co-founder of Maximum Profit, and we're all about helping you build the business that you imagined. Now, one of the things that happened in 2020 was the coronavirus made the government have to rethink a lot of its strategy around stimulating the economy, and one of those things was making an amendment to what was called the instant asset write-off. Now, this policy was always there and always allowed you to write off things, I think from 2015 onwards, up to $30,000 in value, and you could write those things off instantly. But of course, because of coronavirus, they made an amendment to this to raise it up to $150,000, which meant that you could now buy things like big pieces of machinery and you could write those things off in this financial year. Now, there's a few cut-off dates for that, and that is that you must have purchased the equipment before December 31, 2020. So if you didn't buy anything, you've lost that opportunity. But wait, I'm going to help you understand why you can still take advantage of it, because they did extend it. But you must use that equipment and have it installed by the 30th of June 2021. So if you bought a car, you bought a bit of machinery and you're waiting on delivery, you really want to push the company that bought it off to give you that item before the 30th of June 2021 so you can start using it for business purposes, and that way you can make the claim. If you don't have it in use by then, unfortunately, you do not qualify for the claim. Now, having said that, the instant asset write-off is not disappearing. They've actually changed the name of it. You may have heard this. If not, I'm going to introduce it to you now, and it is called the temporary full expense, and that came in October 2020 and goes all the way through to the 30th of June 2022. So this means that you can now buy equipment for your business, you can upgrade existing equipment, you can even buy second-hand equipment under certain circumstances and still get a full expense write-off with no cap. So the $150,000 cap disappeared, and they've now extended this through until the 30th of June 2022. Now, can you claim for a car? Now, this is a big question that we get all the time. Can I go and buy a Ferrari or a Porsche or something crazy and get a full tax deduction? The answer is no. So there are certain items in your expenses that they are going to limit the amount or exclude completely, and you need to get yourself up to speed on that. But when it comes to motor vehicles, the cap for a motor vehicle, I've got it written down here, in the financial year of 2021 is $59,136. That's straight off the ATO website. May change, but they've said that $59,136. It's got to carry, if it carries less than 9 people and can carry less than 1 ton of stuff. So like if it's a 1 tonner or more, then it doesn't apply. But if it's basically a car, so that's to avoid or to stop people from rorting the system, going out and buying these, Ferraris and Porsches and making an instant tax deduction on those things. It is there to stimulate the economy and buy equipment for your business. Now, of course, if you're buying a CNC machine or maybe a forklift or something that's more definitely 100% business use, then you won't have any problems. Even though a forklift carries less than than one person to has, maybe it has more than a 1 ton lifting capacity. I don't know, but I'm pretty sure that would be classified as equipment, and that would definitely be something that you could get the instant temporary full expense, not the instant asset, the temporary full expense, and you can claim that in your profit and loss statement for the year. Now, I'm just going to quickly say that I'm not a financial advisor, I'm not an accountant, and you should go and get your own advice. So there's that little disclaimer out of the way. But I wanted to let you know that if you do decide to go and buy a car or equipment, you do not get 100% of your money back. This is a common misconception or a misunderstanding of how tax deductions work. The way to think about it is like this. If your business is profitable and you were going to make $100,000 in profit, let's say you get to the end of the financial year and in your profit and loss statement you are showing $100,000 in profit, you will pay tax at the tax rate that's applicable for your company. At the current tax rate in Australia, I think is 27.5%. So that's what you'd be paying. You'd be paying a $27,500 tax bill. If you went and bought a $100,000 piece of equipment, so long as it wasn't a car that was included, if it was a CNC machine, for example, you would put that into your books as a expense, as the full expense, that 100,000, that would bring your profit down to zero, and then you would pay no tax. Okay, even if you leased that equipment, because you'd still be paying the equipment off over 5 years or 3 years or whatever it is you leased it over, you would just pay zero in tax for that financial year. That's how it works. If you were to buy a motor vehicle for $100,000 and it was like a luxury car, you could only claim that $59,136. So you'd still pay tax on the remaining amount. Okay, so the maximum you can claim is at $59,000. However, if you were to buy a truck that could carry, 8 ton, then of course you would get the full amount to expense in that financial year. So there you go. Hopefully that's helped you understand how you can go about using the expenses in your business to reduce the tax that you pay. If your business is not making a profit, or you don't think it's going to make a profit for the next few years, you might be planning losses, then there's probably no benefit in just spending money for the sake of spending money, because you don't have any profit to offset with the expenses. Okay, it's really only if you've got profit that you'd even think about doing this. And of course, you wouldn't just go buying stuff for the sake of reducing tax if you didn't need that equipment. You want to make sure you need the equipment or you need the car before you go buying it. I'd much prefer than buying a depreciating asset to put that money that is left over after I pay tax into some sort of investments, into marketing, into hiring great people, into doing something in my business. If I needed to, just don't think about it unless I'm spending just for the sake of spending. Not going to help you at all. And of course, if your business is not profitable, guess what you need to do? You need to reach out, talk to somebody at Maximize Profit. The team here are ready to help you build the business that you imagined. Thanks for watching. If you enjoyed the video, give it a thumbs up. Leave your comments down below. If you've got any other questions about the instant asset write-off or this temporary full expenses, they're calling it now, please leave them down below in the comments and I will get back to you. Take care.